Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show here on ITM Trading. Well, my guest today says, once you rid yourself of the parasite, the body thrives. Why am I bringing this up today? Because we're going to be talking about Argentina and lessons that the U.S. can learn moving forward. Joining me to do this is Joe Brown from Heresy Financial. Joe, so good to have you on the show.
Yeah, well, thank you so much for having me. You're one of the best in this interview game, and so I really appreciate it. It's going to be a lot of fun.
I appreciate that. Well, I have been following your work for quite some time, Joe, and I love anyone who's out there educating people about the concept of money, what money actually is, because as you know, we meet so many people every day who have no clue about money or the fact that it's being devalued, you know, as every single minute goes by. So thank you for all the education you've been doing. And I want to talk about all this with you. And especially it's the first time you're on our show, new to my audience. So I'd love to just get your thoughts overall on the monetary system. But one of your recent tweets that caught my attention was, you know, this parasite quote that I just said. And I know you've been obviously following what Milei has been doing in Argentina. And there's so many lessons of what he's done for the country and things that the U.S. should be paying attention to. I mean, what do you make of, you know, his first year in office and the turnaround that this libertarian has done for the country?
Yeah, I mean, it's absolutely incredible. It's so funny whenever you talk about the tumor that the United States government is, or really any large overburdened government on an economy. You talk about, hey, we need to remove it. We need to make it smaller. We need to, you know, what I said was if you remove the parasite, then that allows the body to divert its resources to the things that the body actually wants to use those resources for, and the body starts to thrive. The economy in the nation is the same way. And the number one response that I think people are just programmed to ask is, well, you can't just, take it away. You can't just remove it. You've got to replace it with something better. And if you don't have any alternatives, then why not just leave it in place? And it's like, if you go get a surgery because you've got a tumor, do you want the doctor to replace it with something else? No, the best thing possible is to just remove it and not replace it with anything else. And there are a lot of people, I think, are idealistic, and they think, okay, there's these power structures that are in place. Our enemy has been using them. So the best thing to do would not be to remove them. It'd be to get the good people in those positions of power so we can turn it around for the better. And that never works. The only thing that ever results in is a cementing of that power structure over time. And just like Warren Buffett says, if you are running a company, you want to make sure an idiot can be put in charge and it can still run smoothly, because someday an idiot will be in charge. So you want a system that is kind of idiot proof, or in government, you want a system that is tyrant proof, that it's something that doesn't attract the people who want that kind of power. And that's exactly the kind of system we have today. It's attracting the people who want to wield that power. And so you look at somebody like Milei, who's able to successfully slash government spending, deregulate. If you look at the inflation rates collapsed there, which a lot of people are confused about that as well. They look at the year-over-year inflation rate and they say once Milei came in, the year-over-year inflation rate went up. And it's like, well, that was year-over-year. You're comparing the prices to when he wasn't in power. So the proper chart to look at is the month-over-month inflation. You can see basically from the day he took office, the month-over-month inflation rate collapsed. And so it's just absolutely fantastic what he's been able to do there. And we can talk about some of the things that I think could translate to what they'll be able to do here if they implement some of the things that he's done there and he's talked about. And it will not result in an economic crash.
Why are you so confident it won't?
Well, we've seen it here, but number one, we're seeing it happen in real time right now in Argentina, but we've seen it happen here in the past as well. During World War II, top economists were absolutely terrified of the war ending because they were saying it was going to plunge us into another Great Depression, because you'd have all these men just without jobs, just unemployed, and they'd come home, we'd be in the midst of a Great Depression again. But that's just looking at one small sliver of the picture. You're not taking into account everything else that's happening. All these men who were employed by the government government employees, they were in the military. That's just diverting resources away from the productive economy. You're taking money from the productive economy, sending it to soldiers. You're taking food away from the productive economy, sending it to soldiers. You're taking steel and oil and energy and everything, all those resources away to send them literally for destruction. And so when you release that and suddenly you have people who are able to work and be productive again, by nature, humans produce more than they consume. Otherwise, we would have nothing. By nature, on net, humans have to produce more than we consume, or at least the same. So when you have all of that productive capacity be released and stop being used for destruction, you have an economic boom. And that's exactly what happened when World War II ended. All these men came home, started producing again, started working again. We had all those resources freed up. The exact same thing would happen today if you stopped all the waste, stopped all the government spending, fired a bunch of government employees, stopped all the spending on government contractors. All of those resources that are being sent by definition to something that is less profitable than what the free market would do with it. Otherwise, the government wouldn't be doing it by force. The free market would already be taking care of it. You would have all that unleashed on the economy. There'd be a huge boom.
Well, that looks like that's the exact blueprint that's going to be set up for this next administration. Obviously, Elon Musk and Vivek planning major cuts, firing of many government employees, the waste, as they call it. I mean, folks want to know what's in store. What's that going to look like? How drastic could it get, Joe?
I mean, in my opinion, the more drastic, the better. And I don't think it's going to be, for somebody like me who looks at that as something, hey, this will result in a lot of good for almost everybody except temporarily except the one person that loses their cush government job, which is, fine with me. But for everybody else, it's going to be better. I don't think it's going to be as drastic as some people fear and others like myself are hoping for. Because the reason it exists is because the people who are in power have an incentive to keep it that way. So every single government contract that tries to get slashed, there's going to be lobbyists and money and corporations who have the politicians and the people in Congress. They've got their pockets lined, and they're going to be fighting till their dying breath to keep that in place. So I think it's going to be a lot more difficult to shrink down this parasite than what it looks like right now.
And also, to your point, also on the health front, I mean, I'm all for, as a mom of twin boys, I'm all for RFK wanting to, ban, everything from Pop-Tarts to whatever, Gatorade.
Yeah.
But he's going up a huge machine here.
Yeah.
How successful will he be going up against like big pharma and the food industry?
Yeah, with the health stuff in specifically, I think there's actually a little bit more of a case to be optimistic about that, because one of the main things that he's talked about that will kind of turn this around is declassifying and releasing all of the records, all of the studies, everything that the CDC does. It's all public, or it will be. And what that will do is it will allow the lawyers to start suing because right now that's all kept behind locked doors. Nobody has access to that information. And it's pretty clear from the people who have done the deep dives that there's the information. The people on the inside, they know a lot of this stuff is harmful and they've hidden the evidence. If the evidence gets released, you allow lawsuits to happen, and the free market will take care of it then. People will be able to, profit off of the collapse of some of these harmful things, and the people who are doing it the right way will be able to succeed. And so I think for the health stuff, I'm a little bit more optimistic about that.
Anyone who follows your work, Joe, I always say you're one of those hybrids that embraces both gold and Bitcoin. Anything outside the current financial system, if that's a good summary. So what do you make of this current administration's embracement of Bitcoin, and what could we expect?
Yeah, it's kind of funny because when you look at the reason why Bitcoin was created in the first place, and the reason why its adoption really started to take off organically, it goes back to what the government has done to our money. How the monetary system and the dollar has been abused in order to benefit those in power. And let's just hypothetically say that they had never done any of that, that the dollar operated close to a fixed supply that contracted and expanded with free market forces, through lending, and there were actual contractions in the money supply when there was overspending that occurred. You have a regular boom bust cycle that maybe it's not ideal, but it's a lot better with a lot more free market forces that allow the money to give a price signal that economic actors can take and use successfully. They can trust in interest rates and use those signals effectively to make long-term planning decisions. You don't have money printing to bail out big banks and all that. You would have never seen something like Bitcoin get created. There would be no reason to create an alternative. So it's kind of funny. You're in this little bit of a catch-22 where it's like there's a lot of momentum behind the reasons for wanting to protect yourself from the dollar. So you want to have
Right.
a lot of ownership in gold and Bitcoin and hard assets and diversify globally. But the stronger, let's say, optimistically, let's say the dollar, the Federal Reserve finds Jesus and they stop manipulating the money supply at least as heavily. And you start to see the balance sheet at the Fed get wound down. And you see more free market forces on the price of money, more rules-based approach to monetary policy. You see the deficit get shrunk, and you see the national debt start getting worked on and the spending go down. You have less of a case for saying, hey, I need to own this alternative hard asset over the long term.
Right.
If the government buys a bunch of gold and buys a bunch of Bitcoin, it's like that strengthens their financial position. It almost removes the need for it in the first place.
Right.
So I think there's a lot more momentum behind. It's a lot harder of a snowball to stop than they are making it out to seem right now. I don't think if the government tries to even to buy 1 million Bitcoin, that's going to do anything. I think the snowball on the debt through the interest rates and the interest cost on the national debt is growing so fast that alone, plus the mandatory expenditures like Medicare and Social Security, that alone, it's like that's almost the whole problem. You could cut everything else and you still have a big problem.
Well, exactly. And I'm so happy you brought that up, Joe, because there is a lot of optimism right now from a lot of folks with this new administration where they think that the economy is not going to go off, the rails anymore, that the wheels aren't going to come off miraculously. But the debt itself, I mean, the deficit, 2 trillion, that doesn't just go away.
Mm-hmm.
Right?
Yeah.
So let's talk a little bit about the dangers of being blindsided by this.
Yeah.
Because that's what I'm afraid of, that a lot of folks are just, hoping there's going to be some sort of magic wand and all the problems go away.
Yeah. Well, the optimistic argument says, that everything is relative. So maybe the deficit doesn't get shrunk that much. Maybe it goes from 2 trillion to 1.5 trillion, or maybe even goes to 1 trillion. And the spending, let's say, goes from 6 trillion down to 5 or 4 trillion. The other side of the equation is that a lot of that wealth is then kept in the hands of the productive economy. So that's better job opportunities. That's more job opportunities. That's more room for investment and investment into the future. So the productive capacity of the economy can rise as the burden of the government shrinks. And so that is one thing where it's like, okay, well, you don't need the deficit to go to zero. You don't need the government to run a surplus necessarily. You don't need the spending to go back down to 2 or 3 trillion like it was just a few years ago. Because every single dollar that the government doesn't take is a dollar the productive economy gets. So it's a $2 swing basically. And just to clarify for those who are, just economically haven't heard this argument before, whenever the government does something, it is by definition wasting or a net detractor of wealth. Because if I decide to do something with my dollar, it's because that's the best thing that I think possibly could happen with that dollar. When I buy a cheeseburger, it's because that cheeseburger is worth more to me than not having a cheeseburger. So, but it's not objective. So value is subjective. It's not that the burger is more valuable than my money. It's just that burger is more valuable than that $5. So when the government artificially enforces a law or tax or something like that, it's causing behavior to change from what it would be otherwise, forcing the economy to do something that is by definition less profitable, less valuable, because value is subjective, which is a net drain on wealth. So the more you can remove that from the system, the more wealth and value is left in the hands of the economy. And so, that's a really really good sign for the future. But the hard thing is the mandatory stuff. There's nothing is happening to Medicare, nothing is happening to Social Security, nothing is happening to military spending, and nothing is happening to the interest on the debt. And that's like everything. You get rid of everything else, you still have a big problem with those. So
exactly. You said recently, great news. My in-laws just asked me if they should sell their Bitcoin because it's up. You say the bull market has officially begun. This is the part I liked. You said the last time they asked about selling their gold in December 23rd, gold is up $800 an ounce since then. Note, I told them not to sell their gold last year. Thoughts on gold given this current ecosystem, Joe?
Yeah. I always maintain a large position in gold, always maintain that as a recommendation because gold is savings. When you look at the purchasing power of gold for thousands of years, it remains stable when you're measuring it in things that don't get cheaper from deflation. So it's usually things that require a certain amount of human time, and technology hasn't gotten rid of that yet. So things like a haircut, things like a custom three-piece suit, things like the salary of an army captain. You can go back and look at Roman centurions, and when you look at their salary in gold, it's the same as their salary as an army captain today as measured in gold. The dollar amount changes, but the gold amount really doesn't. And so purchasing power in terms of gold either stays the same or the purchasing power increases over time. So when you look at how much food you can buy today with an ounce of gold, it is a lot more than you could buy, a couple hundred years ago with an ounce of gold, because technology has allowed us to make food cheaper in real terms. So the purchasing power of gold is very stable over time, or it slightly increases due to technological deflation, which is a great thing. So I use gold as a savings account. When you're seeing the price of gold, let's say it's over a long period of time, it goes down. Well, then you're experiencing large scale deflation. Your purchasing power is remaining the same, which means if the price of gold is going down, everything else is going down as well. So if you use gold as savings, your quality of life is preserved. If the price of gold is going up, that is big money sniffing out future inflation. When you look at the price of gold in 2019 through 2021, it was like a 40% increase. That whole entire move happened before the CPI ever broke above 2.5%. And so when the price of gold moves up, it is big money sniffing out, hey, there's some money printing coming and the inflation is around the corner. And due to monetary policy, fiscal policy around the world, I think there's a very good case to be made for that right now, which is what gold is trying to tell us.
And I'm happy you're saying that, because going back to my point of people being blindsided, I'm having conversations with people where they feel, they're on the sidelines of whether they should be buying gold now, because there is this sense of optimism that everything's going to be okay, and it's a safe haven play. So if you could just expand a little bit on that, of how it should be there so you don't get blindsided.
Yeah, absolutely. When there is no way, there's really no way out of the financial situation without some level of money printing, unless you literally put like Ron Paul as the dictator of the country and he was able to just do everything he said should happen to the budget and the spending. There's no way, when you look at the way our government works with Congress and lobbyists and the agencies and everything like that, it's just very, very low likelihood that anything happens to a significant degree that prevents the necessity of money printing. So you look at the spending, you look at the mandatory spending, how much that's going up by. Social Security is going to be drained in 7.5 years. They're not just going to let those Social Security payments go down to 70%. They're going to backfill that. You can't tax that amount. They're going to print it. Same thing with the interest on the debt. Interest rates, whether they're 3% or 6% at the short term, the government is rolling over all that debt with T-bills right now. So you're not looking at, the government's not rolling over its debt into 10-year or 20-year treasuries. the government is rolling that over every couple of months. Like the majority of the national debt right now is held with T-bills. And so what's happening, the reason why they're doing that is because they're expecting the Fed to keep lowering interest rates to help out with the expense of the national debt, which is money printing. You get an expansion of the money supply in order to deal with that. And yes, the banks will be helping out with that as well. We're probably going to see some regulatory changes with the banks. You're going to see treasuries become fungible with reserves for banks. So you don't have to apply the risk limits to treasuries. So banks will be able to loan an infinite amount of money to the US government, regardless of the price of that debt or the value going down, because at the end of the day, they could just sell the debt to the Federal Reserve at full price if they need to. So there's no risk on treasuries, or there will be. This is the move they're going to make in the future. So all of that is money printing, and that's how they're going to deal with the expenses: money printing, inflation, higher rates for everybody else. There's almost no way around that.
You made me think, Joe. Next week I have Dr. Paul coming on the show. I'm going to tell him, the greatest irony would be if you were made Fed head.
Yeah.
Could you imagine that? Anyhow, last point. If there's no way out, do you believe in a reset, a complete financial reset?
I guess it depends on what you mean by a reset. I think in order to have something that you get a big, fairly quick collapse, either through hyperinflation or a deflationary death spiral, something like that, you have to have some big policy errors that are maintained for a while. And I don't necessarily see that as something that is super likely, because everything that happened in 2020 and 2021 through the money printing, and then that causing the supply chain issues and the locking down of the economy and all of that, those errors were pretty recent. And so what you're seeing since then is a very, very careful approach to do things with a scalpel-like approach. So instead of just a sledgehammer of saying, we're going to print $3 trillion, we're going to send it out to checks to businesses and individuals. It's like, that's a sledgehammer approach. They're likely not going to do that again, because they see now the inflation cat is out of the bag. It's very difficult to put that away. It's probably not going to happen that way again. If you start to see, let's say, a huge unemployment wave sweep the country, maybe you get a universal basic income of $1,000 a month rolled out just to people who have zero income, and it's very, like, very, very scalpel-like approach, not a wide thing. And we see this with the banks right now. They said within the last 2 years, they didn't say, hey, we're just going to bail out any banks if they collapse from what we've done with interest rates. They said, no, FDIC will cover it, and then just what is covered. But when Silicon Valley Bank failed, they're like, all right, yeah, we'll bail out the whole bank. But they came out like very quickly after that and said, this is a case-by-case approach. We're not just going to say we're going to do this for every bank. So if your small bank fails, it's like, well, sorry, you're out of luck if you got more than 250K there. So I think they're approaching this with a scalpel-like approach so they don't tip over into hyperinflation, and they're always going to lean that way. So I don't think they're going to dip over into a deflationary death spiral.
Joe, just to wrap here, as we head into the new year, I can't believe I'm already saying a new year. What's the most important item financially you're watching? Like, what's on your radar that you're carefully watching?
Well, there's two pieces to this, and I think that this is where a lot of people get confused. There's the economy and there's the markets. And they're not the same thing. And in fact, a lot of times when the economy is showing big signs of trouble, markets oftentimes do very well. And usually by the time the economy has already kind of bottomed and is heading out, that's when the market starts to price in all that risk, and you start to see a crash. And so when the economy is struggling, a lot of times it's like individual households are struggling. So it might be hard to put food on the table. It might be hard to, pay the bills. It might be hard to get ahead on your, paying off your credit card debt. Like, that's the experience that most households are experiencing when the economy is having trouble. And it's like, now I can't invest right now. But the markets usually during that time are doing pretty well. And so if you are kind of over that fence a little bit and you do have the ability to invest, just because you see problems in the economy does not mean that you should sell everything and go to cash. More money has been lost trying to time tops like that than has been made by capitalizing on a collapse. So when markets are frothy, you can hedge, protect yourself from those downside risks, lean a little bit more into some of those safe haven assets, maybe build up your cash position a little bit more, but don't stay out of the markets expecting a collapse just because the economy is facing trouble. The other thing is the American economy is very resilient. Americans are very resilient. The American spirit is very robust in terms of we're going to do what it takes, kind of the cowboy spirit. And I think that's a lot more universal than not. And usually people are going to try and find a way to make it work. So if markets do collapse or at least correct, usually that's an opportunity to buy, especially when you're expecting money printing to come around the corner, because a rising tide lifts all boats. And so I'm not out of the markets. I am positioned to capitalize on a correction if it happens, but if it doesn't, you're riding that wave up higher. And the economy is different than the market.
Joe Brown, I appreciate you coming on today. Thank you so much.
Yeah, thank you so much for having me.
Yep, and we'll see you soon. And thank you all for watching. We'll have more great content heading your way. And be sure to be on the lookout for the launch of our Outlook 2025 series coming out later this week. In the meantime, don't forget to sign up at danielacamboni.com to stay on top of it all. And of course, subscribe to our YouTube channel right here. That's it for me. We'll see you soon. Gold prices are now back up after taking a breather following the win from President-elect Trump. Many thinking, well, now that there's euphoria back in the markets, maybe now is not the time I should be buying gold. Well, I'm here to tell you that if you track history, it will prove time and time again that the longer you wait, the more you will generally pay for your gold. So that's why I urge you all to reach out to one of my colleagues at ITM Trading via a Calendly link. You can find that below in video, and they will walk you through all the fundamentals and the main pillars, the reasons you should be owning gold today. Do it now.